what we want to do is start by understanding some of the very basic fundamental concepts. If you are either looking at becoming a homeowner or are a homeowner, one is income from house property, this concept and how it's sort of, defined in tax parlance. And the other is this concept of loss from house property. A lot of people are thinking already about a loss from house property and how then they can be very smart with tax saving, etc. So let's again go back to the basics.
So like everything else in tax, it's complicated. So I will try and make it a little simple. First, it needs to be divided up between property where you stay yourself. When I say you, it can be you, family, anybody else, versus the properties that you have let out. For properties that you stay yourself, there is no question of a rent. Okay, you getting any rent. So therefore, you are allowed to minus from the, and that's always going to be a loss. So that's called self-occupied property.
Right.
From there, you are allowed to minus. You are allowed to claim a loss up to 2 lakh rupees in respect of interest paid on a loan taken to acquire that property.
So the reason it's called a loss from house property is because the annual value of that house, it's deemed to be, I think, 0, right, in this particular case.
Correct.
And then you are paying interest on that house, interest on the home loan, which you can claim as a deduction.
Correct.
So since you are paying an interest, you're paying off a loan, there will be a loss from that particular
there will be a loss
house property.
Subject to that 2 lakhs simply because that is the maximum that is allowed to be deducted. To complicate it further, that deduction is allowed only under the old regime. It's not allowed
in the new regime. Important. Okay, so what all can you do with this loss? Now, I bought a home loan under the old tax regime. I'm, getting my 2 lakh rupees of deduction on the interest, 1.5 lakh rupees of deduction on the principal under Section 80C. Now, I have loss from this house property in which I'm staying. What can I do with the loss?
You can adjust it against your salary. You can adjust it against your business income. Income from all other heads of income.
But up to what levels?
2 lakhs, maximum of 2 lakhs. In self-occupied property, the loss cannot be higher than 2 lakhs. Because the maximum allowed deduction itself is 2 lakhs. So the loss cannot be more than 2 lakhs. Now, so I'll come to the second leg.
Right.
In the second leg, where we are talking of let out properties, properties on which you're getting rent. There, of course, the rent is taxable. From the rent, you minus the municipal taxes paid for the property. Whatever is the resultant figure, that's called annual value. 30% of that is allowed as a standard deduction.
Right.
For all expenses incurred to manage the property, etc.
And this is a house that you've let out.
This is for a house
you're getting
that you have let
rental
out.
income from that house.
Absolutely.
Okay.
Then you are allowed to claim without any limit any interest you might have paid on a loan taken to acquire such a property. And this is under both the new tax regime as well as the old tax regime. Now in India, what happens is the rental is roughly 2-3% of the value. So let's say 2% net of municipal taxes. If you have taken a 70-80% loan, on that if you are paying 8%, that's like 6.5%. So invariably this will result in a loss.
Even on a rental income, you will have a loss.
You will have a loss, at least till the loan is there. Right? Now that loss, again up to a max of 2 lakhs, you are allowed to adjust it against salary, business income, etc. Balance loss, you can carry it forward.
For 8 years?
For 8 years.
For 8 years. Thank you for watching CNBC TV 18 and do follow us on all our social media platforms for news, updates and more.